Imagine this. You're chilling on your porch in Florida or your apartment in Chicago, scrolling news feeds, and you see a billionaire snagged a $150 million Picasso. You think, cool story, but that's light years from my Roth IRA. What if I told you that right here in 2026, you could claim real ownership in that Picasso, or a Ferrari, or a Rolex for just $100? No Wall Street connections needed. This is fractional alpha, the breakthrough letting regular Americans diversify into luxury assets, outpacing inflation and stock slumps. Hang tight. I'm walking you through it step by step with practical tips to start safely. Hey everyone, Dr. Drake here, dishing out your financial freedom prescription. Let's hit the ground running with the end of gatekeeping. As of February 21st, 2026, the S&P 500's up just 1.11% year to date, hardly beating your grocery bill hikes. But the luxury scene? Explosive. Sotheby's projected $7 billion in consolidated sales for 2025, up 17% from 2024, and Christie's nailed $6.2 billion, a 6 to 7% jump. Blue chip art, wines, cars, they're thriving while stocks flatline. These gems once needed a $10 million buy-in, gated for hedge funds and elites. Blockchain changed that, slicing assets into secure microshares. My $100 challenge? Your path to equity in the untouchable. Pumped? Let's decode the mechanics. Fractional Alpha's nuts and bolts are user-friendly yet robust. U.S. trusts wrap tangibles, like a Warhol or Patek watch, into blockchain-backed digital shares for airtight ownership. Pro security for everyday investors. No personal storage headaches, platforms cover it. Skip crypto's wild volatility or text drops. A diversified masterpiece basket? Rock steady thanks to scarcity. Blue chip art averaged 8.9 to 11.5% annual returns over the last 20 years, often besting the S&P's 7 to 10% long-term clip, especially with US inflation at 2.4%. Liquidity? Sell your fraction on secondary markets like a stock trade from your app. Fees typically 1 to 2%. Practical tip: assess your readiness first. Got a 3 to 6 month emergency fund? Diversified in stocks? Use tools like Vanguard's quiz for risk tolerance. If you're non-accredited, net worth under $1 million or income below $200,000, start with Reg A+ platforms to comply with SEC rules. See the potential? Billionaire diversification's up next. Channel the ultra-rich. It's doable now. 2026 high net worth strategies from coasts to heartland allocate 25% to uncorrelated hard assets that hold firm when markets wobble. That's alpha, scarcity-fueled outperformance. With inflation at 2.4%, these beat the S&P. Limited Basquiats or Lambos drive demand. Craft a barbell strategy, 80% safe like U.S. Treasuries, yielding approximately 3.5 to 4.5%, 20% in fractions for upside. Begin with $100 drops, art, then watches to hedge dollar dips. USA Pro Tip: factor taxes. Long-term gains at 28% federal, plus up to 3.8% NIIT if income's high. States like California tack on more. Consult a CPA for K-1 forms from platforms. Risks? Illiquidity means no quick cash outs. Fees nibble returns. Markets can dip 5% like art in 2025. Diversify across 3 to 5 classes to mitigate. Nodding along? Time to build your vault. Your digital vault's a snap with 2026's top US platforms. Art? Masterworks. NYC-based, fractionalizes Picassos and Warhols, averaging 11 to 15% net returns, but often needs accredited status per SEC. Non-accredited? Rally shines for cars and collectibles, Ferraris, baseball cards, minimum $50 to $100, Reg A+ friendly. Vinovest rules wines, California cabs or Bordeaux, 2.5% fees, bonded U.S. storage. Watches. Elephants or timeless slice Rolexes/Pateks. Stick to provenance pros with Sotheby's appraisals. Your $100 ties to verified authenticity. Utility perks. High-res art views. U.S. investor communities. Zoom chats. Tips. Virtual wine/car tours. USA twist. No FDIC here. Treat as higher risk. Track basis for IRS. Pub 550 collectibles rules. Excited to launch? Execution's straightforward. My practical roadmap gets your first $100 working, minimizing 1 to 2% fees. First, self-audit. Emergency fund solid? Portfolio 5 to 10% alternatives? Research assets on platforms for proven growth, like Masterworks Warhol at 12% projected. Second, sign up. KYC for U.S. compliance. Link Bank. ACH free. Third, buy. Low minimum deals. Diversify basket style. Fourth, monitor via app. Alerts for news. Hold 3 to 5 years for exits. Fifth, exit on secondaries. Not instant, but improved in 2026. Scaling. Reinvest dividends into upgrades. Wine to watches. Compounding in a Roth IRA if eligible. Self-directed via IRA Financial for tax-free growth. Watch state sales tax, for example, NY on collectibles. File 1099S/K1S by April. Risks like counterfeits? Verified platforms only. This prescription flips your mindset. Ditch admiring luxury at auctions or malls. Own pieces of America's icons, from Warhol vibes to Napa bottles. For $100? A smart stake in wealth building, fraction by fraction, with patience for 7 to 15% returns. The alpha's calling. Act before shifts. What's your starter asset? Comment, subscribe for more, and let's dominate 2026. Dr. Drake, out.